Hey everyone, welcome to Pilot to Co-Pilot, a leadership podcast with me, Antonio Neves, and Jason Lindstrom. And today we're talking about one of my absolute favorite subjects, storytelling, and specifically how credit unions can tell better, smarter stories that build trust, spark attention, and grow impact. And today we are lucky to be joined by a very special guest. We got Edward Budway. I call him Bud. He's the Vice President of Marketing at Evergreen Credit Union. So this episode is going to explore the tactics that marketing teams can use, from social content to community partnerships, so they can stay relevant and reach people where they actually are. And the hope is to go macro and also micro. So let's get into it. Jason, I wanted to start with you. I'm curious for you, when you started your credit union career back in 1967, I'm teasing, what was your first year in credit unions?
Oh, gosh, it'd be 1992, I think.
1992, totally different media landscape. I mean, obviously the big networks were still a thing. This is pre-YouTube. This is pre-Netflix, pre-streaming services, pre-social media. Newspapers were still a thing. I'm curious if you can recall, what did marketing look like for credit unions when you started? I know obviously you didn't start in a CEO role, but can you recall what the landscape was like then?
Yeah, I was a part-time teller in college, and the landscape was the first email address I got was in college. I didn't even have email at the credit union. We had monitors that were, the monochromatic black with white letters on it, trying to do business that way. And quite honestly, I didn't pay attention to the marketing side of it, but it was a lot of, I guess, direct mail. The website was basic. There wasn't online banking. God, I'm really dating myself. There wasn't online banking. There definitely wasn't mobile banking, because this is pre-iPhones and everything. And so I think it was more about the word of mouth at that point. Advertisements in the newspaper. I know that there used to be sections in the newspapers that would list out all of the CD rates and savings rates and loan rates for credit unions and banks. And so weekly, you would report to the newspaper what your CD rates were. And then they would go in, and I think Thursday was the financial section where all the rates would be on one page of the newspaper. And so, yeah, it was a totally different world from what it is today with social media and digital marketing and all the things that we do. But yeah, it's fascinating to see that growth of where that's come from. There were also probably 15 or 20,000 credit unions, and we're down to 4,000 something credit unions now. So the landscape really has changed a lot.
Absolutely. And I'm going to come to you here in a second, Ed, but maybe, Ed, you can share your perspective on this as well after Jason. Obviously, we're in this age where we could text stuff, we can share posts, we can make videos, etc. But Jason, can you just talk briefly, even in 2025, as we're about to approach 2026, the importance of word of mouth? And the power of when someone gets a referral from someone, whether it's a business owner and another business owner is looking to go somewhere to get a loan, or someone who's looking to go get a home loan, the power of when someone says, you know what, go talk to so-and-so at Evergreen, the difference that makes.
Yeah, I think it's a huge thing. The power of word of mouth has always been important, I believe, throughout time. When you think about everything, even if you go back to Bible times, right? They're all stories. It's all stories that build that book, and they're passed down from generation to generation. And, just one example. And I think it's the same thing. You could be out mowing your lawn. Like, I've got a guy next door mowing his lawn today while we're doing this podcast, and you'd be out mowing the lawn. And as a neighbor, you talk about it, and you may talk about, like, hey, who's the lawn guy that you use? Or you see it and you talk about those kind of things. And it's the same thing, I think, from the credit union standpoint. Like, oh, you're building a new fence, and how'd you finance that? Oh, I got a great home equity loan at the credit union. Oh, which credit union was it? Oh yeah, they were great. They took care of us, all those kind of things. And so that power of word of mouth is still out there, I think, especially, as credit unions, you can offer membership to your family members. And so a lot of times it's like, that passes down from generation to generation, where you get your first savings account is at the credit union, and you grow up in the credit union world. And While there's all this other outside fintechs and other things you could be investing in or doing, it still goes back to that account that you got, that your parents got for you. And Tony, I think you have a story like that too, where, you have had an account when you were a kid. And I think that power of the word of mouth and that talking, and it's the reputation that the financial institution has in the community. All of those things really make a difference. Especially in this fast paced society with social media and everything else. That word of mouth is almost like the justification for going and getting a relationship with a particular credit union, whether it's us or someone else.
I agree 100%. I'm about to embark on a trip with my family, a decent trip, and I'm looking for some travel insurance. And I was spending all this time on the internet searching for the best providers. And then I just called a friend who went on a long trip not long ago and said, "Hey, who did you work with?" And all of a sudden, he told me who he worked with and gave me that immediate trust. When I talked to someone, I said, "Oh, so and so referred me." I feel like then they started treating me different because now they know what's at stake is their relationship with the other person as well. And I'm going to fast forward a little bit because we're talking about, referral and word of mouth. And I know something that you do a good job of at Evergreen is you use members a lot in your stories, if I'm correct. So is word of mouth and referrals nowadays using your members to tell the stories of what credit unions can do, like yours?
Yeah. So first off, Antonio, appreciate being on the podcast. I listened to the first 5 episodes, and it's been a blast. You and Jason have really been super insightful and inspiring. So I'm honored to be on here. And speaking of word of mouth, speaking of stories, I think that even though the mediums and channels that we use for marketing have changed completely since Jason started in 1992, the goal is the same, and that goal is to tell a story. It's to basically do that same word of mouth advertising type of thing, and advertising isn't even the best word, but the word of mouth trust that you can give someone. It's the same thing, but through a different channel. So we at Evergreen, we try to use social media and emails and all the different channels that we have today, again, different from back in the 90s, to do exactly the same thing, which is let people know the experiences of others. And a lot of our videos are essentially just recording a member, a business member, a community partner, like the executive director of one of our trusted community partners, getting them on camera and speaking about all of the positive things that have happened to them since joining up with Evergreen, or since getting that partnership started with us, or since getting their truck for their small snow plowing business.
I'm curious for both you and Jason, and we'll start with you, Ed. How do you, obviously, the Evergreen works with so many different industries, right? You can be that business person that you give a loan to for that truck. It can be that cannabis business. It could be that person who's getting a loan for their home. How do you define what a good story is in a credit union context? Like for you, what is a good story that checks off the boxes that you mentioned earlier?
I think there's a couple of simple, well, we can start with the practical and simple tactics. A way to really accomplish what you're looking to do is to get who the person is, why they're there, what makes them tick, what makes them run, what are they passionate about, and then how Evergreen has helped them accomplish whatever it is that they're passionate about. How has Evergreen helped them accomplish their goal? One example is one of our community partnerships, Winter Kids. Winter Kids is a local to Westbrook organization, but they serve the entirety of the state of Maine, and their goal is essentially to get kids of all ages and creeds and ethnicities and backgrounds out and enjoying Maine winters. Not every kid has the opportunity to do that. So when we first met with Winter Kids years ago, we didn't know exactly what to expect. We didn't know what it was that they wanted from Evergreen. Obviously, we imagined, okay, maybe some sponsorship, maybe some money, maybe some marketing. But what really made the difference was essentially their executive director conveying their goals and why it's important. So the core of their story was, hey, we help kids do this, and this. Get out into the environment, get exercise, be healthy, meet others, be social. Once we learned about their goals and realized that our actual morals and goals aligned, it was a slam dunk. We went right into the relationship.
Yeah, that's a powerful relationship and a great story to tell. Like it's going to touch so many different hearts and also see the results. Jason, I'm curious for you because I'd like you to rewind and just tell me about what were the assets Evergreen had when you started and where you are today? And in your opinion, what role did marketing and storytelling play to get from where you were to where you are today?
Yeah. So when I started at Evergreen, it's actually 9 years ago this month. We were around $250 million in assets. We now are 629 at the end of last month. The marketing budget was well under $200,000. We're now well over $1 million annual marketing budget. And I think that the growth that we've seen is because we've really reached out into the community, not only with advertising, but supporting the community in so many different ways. And it's not that we've had to throw a lot of money. I mean, our community support budget is not, it's a portion of that $1 million, but it's not all of it or half of it even. It's smaller. We've been successful because we've taken our team members and we've worked with these organizations in the community to establish a partnership rather than a vendor type relationship. The mantra that we have is that we're a community credit union. We need to be doing things in the community. So we have people on our senior team that are on boards of some of these organizations and helping guiding their growth. But we've also contribute time and going to different events. We just had a branch manager get a request from, or not a request, but a member came in and is in a high school play. And the whole entire branch went to the high school play to see that as a community support type of an event. And it's just brilliant because that's what we're all about. It's not costing us a ton of money to do these things, but we're supporting people in the community. We're supporting organizations in the community that matter. And when we first sat down and strategized about all this, we're here in Maine. So we sat around the table as marketers and the predecessor to Ed, Howard, was an older gentleman who's been involved in marketing for years, much earlier than 1992. But he really sat down and we said, what is it that true Mainers like to do? They like to get outside. They like their animals. We have a small time like restaurant type culture in Maine. So we want to support these type of businesses and the entities that are out there. We want to get kids outdoors like Ed was talking about with Winter Kids, but there's also an organization called Teens to Trails that gets kids out on trails hiking. So we help work with them. Portland Trails has over, I think, 75 to 100 miles of trails that interconnect throughout this whole region. And we want to support them. And we helped build trails. We helped sponsor bridges that needed to be built over creeks. Little things like that, where we've made a difference as a community-based organization where we are actually working in the community to help support the community. And the story that goes along with that is that people see that in the community and they want to be a part of it. They want to say like, wow, Evergreen's supporting us. I'm going to go check them out. I don't care what rates I get, but because they're right here with the land trust, conserving land in our community. They're actively participating in things and it shows. And, you don't need articles. You don't need anything other than that support, and that word of mouth then bounces around from all these organizations. And it's really been successful. And so the growth is not because of me. The growth is because of our team and our philosophy on doing things in the community.
Yeah, I'm hearing you say something really clear. The difference between a partnership and just a vendor and having that transactional relationship. It's easy to do a sponsorship. I know you guys do ads with the local hockey team there, and I'm sure a lot of credit unions will spend X amount of dollars to put for a billboard to be on the ice somewhere, but they're not actually touching the community and hearing them and speaking them. And I know you guys are so involved. Ed, when some people hear $1 million budget for marketing at credit unions across the country, first, a lot of them are going to be like, what? You guys spend $1 million towards your marketing? Wow, that's amazing. I wish I had some of that. How do you measure, and I'm curious, ROI on that? Because the funny thing about marketing, the funny thing about storytelling is it's not always immediate. It doesn't always lead to that immediate transaction, doesn't lead to that member immediately coming in. And Ed, maybe you can talk on this as well. I remember when we were hanging out when I was in Maine with you two on a bike ride, you were talking about consistency. and how there was a time when you would your streaming ads that you'd run it for a little bit, then you'd stop. But now it sounds like you run them for an extended period because you never know when someone's going to see them. So that's a really big convoluted question. But the question is, how do you measure ROI?
For sure. That's a great question. And ROI is important, obviously. Everyone will tell you that. It's important, and it's important to look at specific parts of it. But at the same time, like what Jason was talking about with the storytelling, I like to kind of think about it as the vibes that you get from an organization, or from even a marketing channel, or the feedback that you might get from the community on what it is that you're pushing out there. I feel like that overall is more important, and what we pay attention to more than just a specific little piece of ROI. Like, for example, something we've stopped doing is obsessing over the specific ROI of a certain channel. So if we're advertising on Google or on Meta, so Instagram and Facebook, if we're not necessarily getting the numbers that we used to from a year ago or 2 years ago, as algorithms change or whatever happens, you might look at that, switch up the ad content, and basically say, hey, did this make a difference? Did it help? Cool. We'll keep it. If not, then you drop that and you go into something different. We have a much larger strategy here where we really look at the overall ROI on how the marketing team's doing, the growth of the credit union, the physical and anecdotal feedback from our members, from our community partners. And that feedback, I think, is just as important or more important than digging into the real specific ROI numbers and trying to 100% optimize what exactly is going on there.
And Jason, how do you look at that when you hand over a budget of $1 million to a marketing team? Obviously, numbers are important to you. You have to meet with the board of directors. What do you want to see to say, okay, that this investment is worth our energy and effort and dollars?
Yeah, so I've been in credit union marketing, business development, advocacy for quite some time. And one of the things that CEOs have always worried about and CFOs have worried about is the ROI of marketing. My philosophy that I've ingrained in Ed and the team is exactly what Ed is talking about. Like, if we see a channel that's not operating properly, or we're not getting what we think we need out of it, we stop that, or we change up the content that we're doing to see if we can drive those numbers higher. But I look at it in terms of membership growth. We've steadily grown between 4 and 5% since I've been at the helm. And that's because the data that comes into us is only as good as what's put in the system. And so, for example, we have digital signage. We're not allowed to have billboards in the state of Maine. So you've got to have digital signage that talks about your products and services, whether you're closed for weather or holiday, whatever, on our digital signs out front of all of our branches. So when I talk about the data is only as good as what comes in, is that our team will say, hey, Mr. New Member that's just come in the door, how'd you hear about us? Well, I drive by all the time. I see your sign. When reality might be that he has a family member who's been in Evergreen for years and had been pushing him to go to Evergreen, but he just used that as the, hey, that's the way that I heard about you. I always drive by. Or vice versa. We have a sign that nobody sees when they drive by every day. And they come in and they're like, yeah, my mom told me I should join. Or my neighbor told me I should join. Or I read in an article, or I got an ad in Facebook. And so there are so many channels that we have now, and I think Ed can correct me if I'm wrong, but it's between 40 and 50, maybe even higher, different channels and ways that we can get eyeballs on our organization. And I would even consider all of our community partners actually channels as well. And so I think that we have to look at it holistically in a way that it's not a specific number that drives people to us, and that a number of things contribute to the overall marketing. And if we are spending $1 million to get 4 to 5% membership growth, then the ROI is working for us. If we're spending $1 million and we have negative membership growth, something's wrong, and we've got to look at that. If we see big decreases in our new members that are coming on board, then we need to know that, hey, we got to make some changes. And so Ed's very in tune with the financials and watching his budget and looking at the numbers. And we do a lot of things by committee at the organization, where the marketing committee meets every couple weeks and we sit down. The VP of lending is in there. The VP that oversees branches is in there. And we give feedback to marketing. This isn't working. We need to change up the loan rates. People are saying this is too high. The CD rates are too low, whatever it might be. And then we adjust. And so because there's a constant adjustment, we're able to continue to capture that market. And I've had other CEOs say, how do you get on like the Bruins, which is, the Boston Bruins hockey? How are you on TV? And I see your commercials there. And it's like, we've worked out some really good, nice contracts that the Bruins advertise. They have an advertising package just for our area, and we're able to purchase that and get on, something that a lot of Mainers will watch when it's hockey season. And we do those kind of things. And so it's very structured. We have a plan around things, and we watch what is happening with things. Ed came to me and said, hey, the Olympics are coming up. The Super Bowl's coming up. I'm like, there's no way we can afford a Super Bowl commercial. We're not that big, and we don't want to reach everybody from, San Francisco to New York down to Miami. We are in 6 counties in Southern Maine. He goes, yeah, but it's going to maybe cost us a little more, but it's going to get eyeballs in these 6 counties. And somebody like Antonio out on the West Coast, you're not going to see these commercials. I was like, oh, I didn't even realize that we had that kind of capability. And so it's being nimble and constantly looking for these local opportunities that are right here in our backyard, but we'll still get eyeballs. And so, we're looking to develop a 15-second commercial that's not much time, but it will get us on the Super Bowl broadcast. Yes.
It sounds like you're being nimble, you're being curious, but also having people on your team who are being proactive, who find out about these things, that can come to you about this and learn. And obviously, they have to convince you, they have to give you the data and the behind it for you to get the sign off and say yes. But important to the right folks who are hungry and excited about this. And I know Ed's excited about this. As you're talking about that, and you hear a number like $1 million, it just reminds me that even if you're doing great, guess what? You have Coca-Cola, number 1 cola in the world. They never stop marketing. You look at McDonald's, number 1 fast food, quick service food. They never stop marketing, even though they're number 1. There's something in it for them. I want to transition here real quick. We want to get more tangible for our listeners. But before we get more tangible, I'm curious, Ed, as you're building out campaigns and initiatives, how do you think about it? Do you think about it, okay, we got to make sure, is there a bad guy out there? Is it the other credit union there in your same 6 counties that you kind of make the bad guy and there's comparison? Or you say, we're not going to go that energy. And it's back to what you said earlier. Instead, we're going to focus on the member and making them the hero. So what's the energy of how you approach it?
That's a great question. It's funny you mentioned rivals. I like to use the term rivalry, friendly rivalry between certain credit unions, and I can answer both sides of that question with the rivalry as well as specific to employees, or is specific to what the credit union just needs to do in that hero. The rivalry side is funny because this kind of goes into real time marketing. If a credit union near us does something, they change some tactic, or they start serving a different type group of members, or they add a seg or whatever it is that they do, we're always looking at that. And I'm blessed with an amazing team of 4 others besides myself. And I know other credit unions, smaller credit unions might go, okay, you got the $1 million budget and a 5-person team. Like, of course you're doing well. I get it. I'm very lucky. Jason at the helm has helped a lot. And, but it's what has really happened is it's allowed us to be real time, and real time marketing is a lot of fun. It's risky, but we're always watching for that trend. So a local credit union stopped taking change, for example. Like a couple of years ago, they basically said, hey, we're not going to take change at our branches anymore. We're going more digital. We don't necessarily want to deal with that. And for someone like a main credit union to stop doing something so practical, so needed, and go, I'll call it new age to be nice, so fast was odd to us. So my team, being fun and younger and sometimes a little bit petty when you can kind of think about it, decided to come up with some ads that just say, hey, sometimes change is good. Maybe it's better to be open to change. And we didn't specifically like target that credit union or anything like that, but we put these ads out and people were commenting, and people on our team at the credit union were like, are you talking about so-and-so? It's like, maybe not.
I gotta stop you. I gotta stop you, because if I could come through the screen and give you a high five right now, when you said you had me at the word petty, I'm so happy. Keep going, please.
So it is funny. And that's not necessarily my style, but that's a couple of the ladies on my team, they immediately saw this opportunity and they said, "Hey, we really got to do this. We really got to try a little bit of that real time marketing. Jump on this trend before it fizzles out and go for it." And those ads, they had high clicks. They had the social media story had a ton of likes. People were commenting on it. It's interesting that the more you can incorporate that real time stuff or the storytelling, it seems to really add natural numbers to whatever it is you're advertising. And we still do just, hey, what our auto rate is today. We'll slap an ad up there. It's static, maybe a little bit animated, and it's super simple. But we find for sure that the real time stuff, the things you really put that mental effort into, as well as the storytelling advertising, just does so well. And that also goes into the hero piece that you asked about. I kind of think of our marketing strategy as like an umbrella. Like we're going all over the place. We're hitting the community partners that need help. Who's speaking the loudest? Who needs the most help from us right now? We'll go assist them if we can, and we'll go put a spotlight on them with our videos and our posts on social media. But that hero type of storytelling is super impactful, and you'll see that from looking at our Instagram, our TikTok, all of our channels that showcase some of the executive directors or volunteers at community partnerships, or even some of our own employees.
Yeah, I love hearing that. I'm curious if you have anything to add. And I'm laughing here about saying the word petty, but as I hear you tell that story, you're serving a real need. People still use change. People, they have the thing, the things you put your pennies in, your nickels in, and all that. And that's still a real need. So yeah, you can have fun with that, and you're still serving a real need. Anything you would add on that, Jason, from a positioning perspective?
Yeah, I think Ed's right that the real time marketing is just it's super important, and being able, like I said earlier, being able to be nimble to change things up. When cannabis was legalized here in the state of Maine, we had to look at, how do we roll that out? And we kept it under wraps for a while. Because we knew that maybe not everybody supports this, and we are a membership community driven organization. And so we had to roll it out quietly, understand the regulatory aspects of it, really build out a good program before we went publicly with it. And now we're doing more publicly because it is real time, and there are cannabis shops and dispensaries and everything all around Maine in our area. And they're not, there's a lot of financial institutions that don't want to take that risk. They don't want to serve. And I look back at how credit unions were formed. They were formed to serve members of modest means and also to serve those that were unbanked back in the Depression time, 1930s. And so here's a group of people that are legal business owners in the state of Maine who aren't able to bank. They're carrying around big wads of cash. They're holding on to cash because it's a cash-based business. And we fit that niche, and we've done a really good job at it. And we've increased the number of people we have in that area. And there's a lot of regulatory hoops that we have to jump through. But again, we're supporting the community and just going back. So it doesn't really matter how much money we spend on it, on any of the things that we do, because we're supporting the community and we're supporting our membership who are members of the community. They live here. They work here.
I want to dig more into this on the real time side of things, because it's interesting, Ed, to hear you talk about the real time, that specific example you gave. Right now, there's somebody listening to this, and there's something happening in their community or in their state, and they're on the marketing team, and they are chomping at the bit to do some real time response, marketing, some ad dollars towards it. But their leadership, their CEO, maybe their head of marketing is like a little bit more conservative and not open to it. So twofold question, Ed, in moments like that, what do you say to decision makers like Jason for it to get easier buy-in? What do you say? And then Jason, on your perspective, what do you need to hear to make it easier for you to say yes? Let's start with you, Ed, how you approach this. And then Jason, what makes it easier for you from a CEO to say yes?
Great question. I think one of the things that it goes even beyond that specific situation is to really let people know exactly why you want to try something, or why your marketing team wants to do something. And there's no need to hide anything. There's no need to not have 100% transparency with your leadership or with your CEO about the trend or about the real time situation that you might be involved in, and talk pros and cons, like the pros of that specific change ad, saying literally, hey, it could be time to make a change, slapping our logo in there, slapping pictures of coins in the actual ad itself, going that deep, almost it was basically everything except for calling that credit union out, which is hilarious. But when you specifically talk about examples and you tell your leadership, hey, this is something that's worked before, you can see all the different social media accounts from bigger companies, smaller companies trying a little bit more edgy, a little bit more a little bit riskier with their strategies or with their specific posts, and go for it like that. Just be transparent so that they understand where you're coming from, and then also be ready and willing to accept that it can be kind of dangerous. It's hugely impactful when done correctly, but it can be dangerous to jump on a trend that might not necessarily know everything about, and that could backfire. So as long as the credit union and your team are ready to accept those consequences and be ready to deal with anything, maybe it's a straight up call out from the other credit union, maybe it's some negative comments, maybe they seem to take the time and the opportunity to comment on posts of ours that the comments have nothing to do with the post. Maybe they got denied for a loan or something like that. Just be ready to address those consequences and be transparent, as transparent as you can with your audience, but of course, 100% transparency with your leadership.
It sounds like you'll counter Jason with a straight up SWOT analysis, if you will, and you're going to provide the data, the examples, all those types of things to make it easier for your cause, your case. Jason, someone's coming to you, they want to try something new. What makes it easier for you in your position to say yes and maybe give them a little leeway in a test?
I very rarely say no. I think that's the biggest thing. I think with my experience in it is that I come from the marketing background, so I understand the position that they're in. And there have been times where Ed has come to me with something. I've been like, well, let's think this through a little bit differently, and I've given him some examples of where it might not work. And I've also come to him and said, hey, 6'7", right? The 6'7" thing on TikTok, it's like blowing up right now. This whole like, hey, 6'7", how can we capitalize on that? And I think we talked about it, and he's been good about coming back to me and saying, we really don't know what that means, and it could be derogatory in some way, and we may have members that get offended if we do it. And I'm like, So having the relationship, if you're a leader of the organization, if you're a CEO, whether you came from the CFO background, technology background, marketing background, you have to understand the financial aspects of it. You have to understand the core of what your membership is about. But you got to have relationships with your staff where you're not the CEO that is like, I don't have time for you. I don't have time for you, Ed. I don't have time for, talk about this kind of stuff. You just go do it. And then when he makes the mistake and puts something out there, come back and blast him because I didn't have the time. That's not good, right? And so I think we have this great relationship in the organization that we've put together, and the culture where no idea is a dumb idea. It may not work right now. We can put it on the shelf for later, but let's talk about these kind of things. And so I think a lot of times I'm open-minded to what the ideas are coming out of marketing. And sometimes I give them some feedback. They're like, I don't know, maybe that could be a little negative connotation, or like, hey, let's try it and see where it goes, but let's not put a whole bunch of effort into it. And I think that Ed gets it and his team gets it, and they know that they've got somebody that any given time, like, can knock on my door, come on in, and hey, got this great idea.
I'm curious, you said something interesting. And someone's probably listening to this, and for them, it's the exact opposite. You said, I very rarely say no. And see, I know, listening to this, they're like, my boss always says no. The de facto response before I even get finished is no. Are you coming from this from a unique vantage point, specifically storytelling and marketing? Is it that you very rarely say no, Jason, because of your background in marketing, or is because the way you've evolved as a leader? And again, if there is that leader that their default is to stiff arm to say no, what should they be open to, or how should they see things?
Well, I do say no too. But I very rarely do. And I think I've made it that part of our culture that it's not necessarily a no, but it's have you thought about it this way? Have you thought about how it would affect? Like, take a look at those kind of things, and then let's talk about it again. Because then they'll come back. It'll be like, you know what? I thought about it more, and you're right. Maybe we shouldn't do it that way, but I've thought about it doing it this other way. And so I don't come out and say no. And I don't think there's anything wrong with saying no, especially but what I want our team to do is think about what the consequences are going to be on all the things they bring to me. The other thing that we're fortunate about is I think that our CFO is very numbers driven, but she also understands that it takes money to make money and it takes money to invest in the community. When the board of directors said, hey, we're a community credit union, we don't do much in the community, the expectation for you, sir, as the CEO coming in here is that we need to be a community credit union doing things in the community. And I was like, okay, let's go. And, that's what our mantra has been, is to do things in the community. And the CFO in our case gets it. I know that there are organizations out there that may be listening to this and being like, oh my God, our CFO will not give us a dime for marketing. Or the CEO doesn't believe in marketing, or they need to cut expenses. And what do? They cut marketing first. And I've been there with my experience to see when those issues happen and you lay off a business development department. Hi, that was me. At one point, my whole team was let go. That had a true effect on the growth of the credit union because they had no more business development that was bringing in a lot of business. But at that time, it was like we needed to cut expenses. And what was the first to go? The business development arm of the credit union that was in the marketing area. And so I've had those experiences, and I think that we've got to constantly look at that. And I think others out there are having those experiences too, where the marketing budget is getting cut short because they're putting more money into the AI or the technology side of the business. But at the same time, then you look at the membership growth numbers for some of these organizations, and they're abysmal. They're losing members. They're losing people because they're not doing enough to draw new people in.
Yeah, it's one of those reminders for leaders not to be myopic, even during cut economic times. Like you said, sometimes the first thing that gets cut is what you need the most. And it's going to stunt your growth long term. So I'm glad you brought that up. And also, Jason and Ed, good news, bad news for you too. After people listen to this episode, you're about to get an influx of marketing pros that want to work at Evergreen, because it sounds like a good place to work. Two last questions. I want to go a bit more rapid fire, and I'd love both of you to share some answers to this. One, Ed, something that was once part of your strategy that Evergreen has stopped doing in the last couple of years, something that a few years ago we did this regularly, but now we no longer do. Anything come to mind?
Yeah, I think there's a couple things, and one of those goes kind of back to the ROI piece that we talked about, obsessing over the ROI of a specific channel. If it's not working, change up the advertising, change up the actual art or the content that you're putting in there. If that's not working, change up your audience on that channel. And if that's not working, then pull out. There's another channel out there. There's a million places to advertise. And honestly, it would probably make more sense to focus on storytelling, jumping onto social media or whatever medium makes sense for you to tell stories about what you're doing in the community or about what your marketing team is trying to push. Changing adds up after a short period of time. Jason mentioned the previous VP of marketing, Howard. He was an amazing guy. I credit my entire credit union career to Howard and Jason, specifically the two of them, because I started back in 2014 as an unpaid intern and have been here ever since. But all of the information and all of the marketing knowledge I got was almost by proxy through the two of them, and because I had never been at another credit union before. And so Jason had certain things that he really believed in. Howard had certain things that he really believed in. And I've tried to be kind of the fusion of both of them going forward. And one of the things that Jason really pushed was, hey, we don't need to spend all the time and all the money and effort changing up our ads every week or every 2 weeks. People don't necessarily relate to stuff for months at a time. Like sometimes we leave an ad out there or an image or an effort out there for 3 months at a time, or even 6 months at a time, depending on the medium. And so we stopped obsessing over that, which gave us the opportunity to, again, focus on storytelling, the social media piece, and all of the new awesome community partners that we've been dealing with.
That's awesome. And this will be the last question. And I'll leave this for you, Jason. Well, both of you can jump in if you want to. Again, there's a credit union right now listening to this, a marketing pro that does not have $1 million budget. Maybe they don't have a $750K budget or $500K budget. They got a little bit of something, but they don't have a massive budget. Is there, I'm going to put you on the spot, is there one low budget move you'd recommend that credit unions can do right now that maybe doesn't even cost them money, maybe getting out in the community, but something that's low budget that they could get some long-term dividends on?
I really do think the community partnership aspect, because you have staff. If you don't have the marketing budget, you have staff that can volunteer in these organizations that can make a difference. If you go to a food pantry and you help serve a Thanksgiving meal as an example, and you have your credit union swag on or your name tag, that makes a difference to everybody you're serving food to. It absolutely does. And that doesn't cost anything but time. That person on your team can develop that relationship with that food pantry by just being there, being present in the community. If you're not a community credit union and you serve a single seg, let's say, Ford Motor Company, Honda, whatever, there are people in need in that community that you can help out. And that type of earned volunteerism aspect shows up more so in everything that we do as an organization. And it's not always about throwing money at it. It's not always about having $1 million budget. We built that $1 million budget over time, and it's been successful for us. We also are 600 million, and there's kind of this unwritten rule. I think it's like your marketing budget should be about $150,000 or so per 100 million in assets that you have. It's about that. I think it's climbed up a little bit, but it also depends on your organization. If you serve a single seg, figure out what's important to that company. And I think most credit unions know already what's important from a social aspect, from a community response aspect. And then how can we get our team, even if it's a small team of 10 or 15 credit union employees, you have one branch at this car factory, how can you get out and help out this car factory do something with their community? And automatically you will see people going, wow, the people from ABC Credit Union were here. I'm going to go join them because they've helped support us. Or I'm going to take a look at what they have to offer when they haven't had that contact before. And I think it really plays a huge role in how credit unions can continue to grow. There's lots of opportunities out there now with mergers and just capturing these fields of membership that larger credit unions are wanting to do. And there's a niche for these small credit unions in their community to continue to survive and thrive. So, we're going to continue to grow and we're going to continue to do these things, but we've got the energy behind it, and it's all based off of the volunteer aspect. And that is one big thing that you could do for very low to no budget.
Well, I think that's a beautiful place to end this conversation. Ed, I can't thank you enough for joining Jason and I. And for you listeners, thank you for joining us for another episode of Pilot to Co-Pilot. We will see you next time very soon. Thank you again, gentlemen.
Thanks, Antonio.